I had a little claim to fame here by picking the silver bottom. I bought silver on August 31st, and I bought physical silver on September, the first day, trading day of September. And I did that for myself and my members, and we sold out of it pretty close to the high recently, a couple weeks back. Anytime you have that kind of a move where silver goes from basically $17.50, $17.40, all the way up to $24, you're overbought, and then you need to consolidate or pull back. Gold has had a tremendous run. I've told my members $17.75 was my upside move on the bounce, and we pretty much got there. Could we go a little bit higher here and there? I do think that is the case, but you're going to need to see some kind of a pullback, some kind of a pattern get established, and then you can make another move higher. Now, everybody is counting out the dollar. Everybody is saying, oh, the dollar's done, it's dead. The dollar is not dead. The dollar will have another day in the sun. It's had a really good correction, which it needed because the dollar is very, very strong in 2022. The dollar probably has got a little bit more downside left in it. And then the dollar's got another rally. The dollar's not out of the equation here. It's going to still play a role. And when the dollar gets very strong, generally gold will pull back again. And, you know, what I will tell all your listeners here, if you can get gold down into the 1,500 handle, buy it with both hands, because I will be extremely, extremely bullish at that point in time. That's my ultimate downside target for gold, and that's where I would jump in head over heels. And I own bullion, gold bullion, silver bullion, since 2003. So I'm already in this, but I do believe that's the second coming of gold. Silver has already made its bottom. So now you just wait for a silver pattern and you can jump in. Silver is going up easily into the mid 30s and potentially on the next big run, even back to its old high of 50.
What brings you to the number, like the 1500s for gold? Because I know, we've made a bottom. I mean, the last bottom was around 1620 or so. And it seems like there's been good support in the 1600s there for a while. So what makes you think that we're going to break that?
Well, I'm not certain we'll break it. It's just a calculation. Believe it or not, when gold was above 2000, I was telling everybody it's going down to 1500, possibly even piercing 1500, may go as low as 1450. And as you said, we got down to the low 1600 area, which I was looking to be a buyer of in the low 1500. So I still needed more downside to go, but that was my forecast. I'm not saying it's going to be perfect, but very often the numbers that I put out there like that, they need to get satisfied. Those numbers are off of calculations that I do on large time frames, and they don't always play out perfectly, but they often will hit and get satisfied. So the gold number never got satisfied, which was around the low 1500s. The silver number, which I had a break of 1750, was going to be my low. That got satisfied, and I think the silver low is in, and it's been leading gold anyway, time-wise. And I think gold, silver, miners, and both gold and silver will do very, very well in the coming years.
Now, is this forecast mainly based off of technicals, or are there also fundamentals you're seeing that could push precious metals lower?
I don't even use fundamentals, but I do listen to them. So when the story unfolds, it's very often the move has already started, and now the fundamental picture is being revealed to the public. But for me, honestly, I'm a technical trader. I've been a technical trader for over 25 years now, and that's purely what I go by. The story, it's amazing because it will come in and it will be told down the road. But a lot of times now when people are getting into hearing about silver now, that move is, it's already moved up $5, which is 30%. So I'm a purely technical trader. Fundamentals to me, I really throw them out the window, to be honest.
And what is then the distinction, I guess, of, you mentioned how you also purchase physical bullion and have that kind of as savings. So what is the distinction between, looking at the charts? How do you look at this? If you're looking at the chart of silver and looking at the chart of gold and saying it'll probably fall, but at the same time, you're still, saving the physical bullion. So how do you play that?
Physical bullion, I've never sold a single ounce of any of my gold and silver physical. And the reason is I ultimately look at that as the ultimate insurance policy. Some people might call Allstate up. Some people might call up their local insurance broker and buy a life insurance policy. For me, it's gold and silver. Gold and silver if you talk to anybody that lives in Venezuela, is what's getting them out of there in that kind of regime. And I think people are a little bit naive to think that what happens over there can't happen over here. Venezuela was once the third richest country in the world, and now it's in shambles. You're seeing things going on around the world that are just, I never thought I'd see it in my lifetime. I couldn't even imagine some of the stuff that is going on. So I look at gold and silver as the ultimate insurance policy. I don't think it's going to save me in the end if this world goes to shambles, but I do think it's going to give me some comfort along the way, and that's all you can really do. So if you're going to buy gold and silver and you want to take physical delivery, just understand it's an insurance policy. Otherwise, you could buy other products out there like the CEF, which is Sprott Physical Gold and Silver ETF. They keep the actual bullion on hand. Those are good products to get into if you just want to have exposure to it, but you still want to just trade it, And I trade the GLD, the SLV, IAU, SIL, GDX, all of that stuff. But that's for cash purposes. I'm looking to make money. I'm not, but my physical holdings, and I keep some on the back of my desk there. Just, I have coins there. I have a 10-ounce bar. And I would just say that's your ultimate insurance policy, and try to have small denominations of it. God forbid we ever have to barter.
I think that's so key is, it's insurance. And at the end of the day, if you don't have any, it's important to have insurance regardless of what the price is at that point. But when it comes to trading, you're saying, right now it looks like they might be overbought. So if you're looking to make money and do this more kind of, in the system and I guess trading electronically, probably hold off at the moment, it sounds like.
Yes, absolutely. I would not be a buyer of gold and silver today. Electronically, with the silver products or gold products, but on a pullback or a consolidation pattern, I'm going right back in. And it was an amazing trade, and you can make a lot of money doing it, but you have to know the technicals. And right now we are at overbought conditions on both gold and silver at this moment.
If you could remind our viewers before we let you go, the main things that are on your radar for 2023.
Well, I would love to get back into silver. That's first and foremost. I think that's got a lot more upside potential, although it does need to correct a little bit. Gold will be on my radar as well, as if it gets into the low 1500s. I love that. I'll probably be a buyer of the US dollar at some point. I'll probably be shorting the euro at some point. I think this is going to be a very, very choppy year. So what I would recommend is learn the charts. Get familiar with them. Don't worry about the news. You're going to hear plenty of news each and every day. Just worry about price action and worry about what moves the markets. That's ultimately what's going to help you in 2023.